Welcome to Mustafa Belkayat's.com analysis of financial instruments. Today we're going to be talking about Pfizer. Before we get started though, I want to explain that we'll be submitting some charts with a lot of horizontal and vertical lines and markups. If you have any questions, suggestions, or constructive comments, feel free to respond to us at the bottom, albruno.quant@gmail.com, and we'll answer all your questions. We know sometimes this can be a little bit more difficult, but we're trying to explain as many things as possible in a short amount of time. We're going to be using the professional technical tool, Belkayat.river. As you see right here, this is actually a daily chart of the PFE. It's approximately 1 year. So let's apply the indicator right now. Before we go too deeply into this, we want to note that we have several key markings along this. We have horizontal lines, which we're calling hip and lop lines. The hip will be the high points, and these pivot off of high historical marks, as you can see right here, and lops, which are low points, which are pivoting off the lower historical marks. Just to be a point of interest here, when you see purple lines, that means there was usually a lower high. If you see purple lines on the low side, that means there is a higher low. The line we have going across the center here is a 200-day moving average. On the outside, we have diagonal lines. Outside lines are called envelopes. We have top and bottom envelopes. And then diagonal lines in the interior are usually our trade lines pivoting off of the verticals that you see. In this case, a short would be in place. This place will be a long, and right now we're in a long on the PFE. Let's do some technical analysis at this moment. Okay, to continue, we'll try to define this now that we have markers on the screen. Our envelopes, our top and bottom outside channels, are designated by following the outside lines of all our hips and lops, our high points and low points. And of course, the bottom channels do the same. In this case, they're marked in red. We'll note that we have, let me see what's the next one, 200-day moving average. You see the line coming from left to right. This has been a 200-day moving average where prices bounced off of it several times. Most recently, it actually didn't touch. It looked like it was coming down to touch, which we consider this to be a very bullish sign, and bounced up again. We note that this had a higher high, the first high in December of 2013. And it was a higher mark from the one that goes back almost 2,292 bars. On the lower side, we had a higher low, but we put a question mark next to this. This is a higher low mark right here, designated by the purple line, based upon this other mark from October of 2013. But it made a slightly lower low in early February of this year. But we're discounting it. We believe that this is just a slight slip. We notice that it's in a long trade channel right now, designated by the blue line pivoting off our vertical, and it's a rising wedge we consider to be very bullish. If we notice any kind of patterns, we try to put them as an extra slide on the chart. In this case, we're going to talk about harmonics. Harmonics aren't exact, so in some cases you might find some of these have a little bit of variance. But what we try to do right here was show that the panel that you see, this slight yellow panel here, is basically the same amplitude or height as you see in this panel in this direction. This has continued for a considerable amount of time, and you notice that the same pattern exists on the top side and it's reversed. If you were to look at this and you're familiar more with technical analysis, it looks like the market is actually coiling or consolidating or actually be ripe for mean reversion. But in reality, this is only one small snippet of time going back 1 year. We want to note that the price of $29.91 on a weekly chart, which is a later slide in this point, has actually been surpassed, and now price is bouncing above it, which is very significant. And of course, you notice right here the rising wedge. Since we're only showing a year, this obviously isn't a strong reflection of the whole historical PFE, but you'll notice that some of these historical hips and lop lines, we put aging on them, and we consider this to be very significant because it shows how long a support or resistance has been in effect before it's been broken. If you notice on the lower side here, these are very young. 255 is the oldest one we show, and the bar has been rising. Where right now, the highest mark we have is going back to 2,414 bars. So if we look at this, we notice right off the bat, some of these historical marks have been broken. This one was 2292 bars old. So this is now broken above it. It's rising above it. This is not significant at this moment. As we said before in the previous slide, the 29.91 mark is actually more significant. But you notice too that this is riding over the 200-day moving average. We consider this to be bullish at this moment, the PFE. One of the studies Mr. Belkayat has is called average true volume. And what we do is we take volume, we average it seasonally as well as another mathematical formula to try to find out the momentum the volume has overall. Usually the orange means that it's a short type volume, or the blue would be a long volume, but that isn't always true. As you can tell, at certain points where volume was traveling down, price was traveling up, and it didn't show much resistance, more consolidation. Of note at this point is that price itself has been traveling around and broke through this high point, but volume has been rising above the center line. In this case, this is a zero line showing a positive volume or negative volume overall. Even though volume has been whipping, it's been consolidating into a sharp area. This should be noted because price is actually breaking into a new channel that's approximately about 5-6 years old. We consider this to still be bullish. Now we go into the weekly chart. Using the same formula, the Belkayat River, we applied it. We note at this point right here, there was a historical mark that price was passing through, and it now has risen above it and has bounced off of it. Of course, you wouldn't see that on a yearly chart because it's just too small for us to. We cannot show everything on obviously one screen, but you can see how price has actually passed through this about 5 or 6 times. And not only has it risen above it, it's bounced off of it once, where price is rising up here. We consider this to be a very strong mark, and we're ready to make our some kind of prediction going into the future. So where do we see the PFE going? We usually like to start with the area where we believe it's not going to go first, and that would be on the support side. But we see our first area of support, if the price happens to drop down, to be at this 29.95 mark, or the 200-day moving average, which we believe will be higher by the time it comes down. So whichever one is higher is going to be the first mark of support. The next mark will be the 28.02, which if it happens at this point, I think it's going to change the direction of Pfizer or put it sideways for a period of time. And let's hope that the third mark, the 27.12, does not get hit. Okay, on the resistance side, the first mark we believe it's going to hit is be the 32.50. Could come up and bounce off of it for a little bit. We expect a slight correction to happen after this wedge is made, but we don't believe it's going to be a serious one. The first serious mark that should be touched should be 33.05. If it makes this and closes above it, then our next serious channel, we're going to find the same harmonic of movement will probably be between the 34.46 and, of course, the 32.50. Hope you've enjoyed this presentation. Go back to belkayat.com for more financial studies. Thank you.